Hi everyone, I'm Anthony Molinaro.
And I'm Timothy Jagger from O'Brien Real Estate, the main property news for 2025.
Now, it's been a steady month for the property market, with values continuing to edge higher despite the unusual slowdown in activity that comes with public holidays and federal elections. According to CoreLogic's latest data, Melbourne's dwelling values actually rose by 0.2% in April, making it the third straight month of growth and a 1% lift over the quarter.
However, the pace of gains has eased slightly from earlier in the year, reflecting a drop in consumer sentiment during April, which was likely influenced by the federal election on May the 3rd and a soft patch in auction activity over, of course, the Easter and Anzac period. But despite these headwinds, prices are still moving in the right direction.
Which is encouraging, really.
Yeah.
Now, the median dwelling value in Melbourne for both units and houses now sits at $786,158, with home values still 5.4% below their peak from March 2022. The upper quartile of the market, particularly inner city homes, has shown and proven this.
Regional Victoria continues to outperform in line with national trends. Regional Victoria outpaced Melbourne's monthly growth, with dwelling values rising 0.3% in April and 1% over the quarter. The median home price in Regional Victoria is now $576,576.
Now, some of the strongest annual growth in the state is being seen in areas like Mildura, that's gone up 9%, Colac at 7.1%, Shepparton at 4%, and of course the Southern Grampians area at 5.6%.
While values are still 6.9% below the 2022 peak, Regional Victoria has proven to be more resilient than the metro market in recent months, a trend reminiscent of the pandemic boom period.
Now, what's happening with rates and inflation? Regardless of who wins the federal election on May the 3rd, the interest rate decision, which is due on May the 20th, 2025 at 2:30 p.m. to be precise, has basically already been made, with economists now agreeing the world has shifted so dramatically that a May rate cut is now a certainty. The Reserve Bank of Australia has been closely watching inflation, and the latest Australian Bureau of Statistics data showed the annual CPI rose just 2.4% for the month of February 2025, bringing inflation well within the RBA's 2 to 3% target band.
How good is that? Now, this aligns with a recent CoreLogic statement noting that the February rate cut had a positive impact on market confidence, which was expected to, but its influence may now be fading slightly as buyers await further clarity on rates and post-election policy outcomes.
Now, rents and yields growth slows, but returns do improve. So Melbourne's rental market continues to stabilise. Rents increased just 0.3% in April, and the annual rent growth has now slowed to 2%, which is down from 9.4% a year earlier.
Which was crazy numbers. Now, here are the latest gross rental yields. Melbourne dwellings 3.7%, Regional Victorian dwellings 4.3%, Melbourne houses 3.2%, units 4.9%, Regional Vic houses 4.2%, and units 5.0%.
Now, while rental yield growth has softened, my apologies, I just jumped in there.
No worries.
The yields have actually returned and showed better for investors as home values rise moderately and rents hold strong. Across the country, investor interest remains robust, especially in higher yielding regional areas.
A quieter month, but stability prevails. As expected, the April-May period saw subdued buyer and seller activity, impacted of course by Easter and the Anzac Day school holidays. Auction volumes and new listings were at their lowest level for this time of the year since 2019, not counting of course COVID interruptions.
However, the underlying market remains sound, so low unemployment, tight rental supply and interest rate stability continue to support values. Even if momentum has slightly softened a little bit, with the election uncertainty now behind us and more rate relief expected, the outlook remains cautiously optimistic.
Now remember, the information provided is of a general nature. Always seek independent legal, financial, taxation or other advice in relation to your unique circumstances. And thanks for taking the time to watch this month's market news. Until next month, it's
bye for now.